Alex, Henderson High Income. First of all, perhaps if I could ask you, what does the trust do? In other words, what's its objective?
Well, it's a simple one, and it's in the title. It's generating a high level of income for investors. We tend to do that through owning both equities and bonds, but the key thing is to have a prudent investment strategy across those assets to deliver a high level of income with the prospects of capital growth over time.
And you've sort of touched on it there. I mean, how does it go about achieving that objective? How would you say you manage it from a style point of view?
Well, we vary the allocations of equities and fixed interest depending on how we see the economic cycle and the environment ahead. But typically it would have 75% in equities and around about 20-25% in bonds. But the key for us is to prudently manage those levels and really keep quite a disciplined value investment style. And the value investment style very much suited to investing for income because you're focusing on well-managed companies with management teams that have been through a few cycles. You're looking at safe balance sheets that are not too heavily geared. And you're looking at cash flow generation. And it's this last one that's really critical for the trust. So we're looking for companies that are growing the amount of cash they produce because it's cash that pays dividends. And that's really what the trust is all about.
And so are there any limits and restrictions on what can you invest? Do you take a company, a stock picking approach, or are you constrained by allocations?
Well, there's certain constraints that are on us because we're an investment company, which are good. And the board of directors and the banks that lend us some money also put constraints. But within that, generally, we won't invest more than about 15% in a single company. Again, we also try not to invest more than about 15% in a single sector. So again, that's the prudent nature of our investment style there. We can invest overseas. Predominantly, the trust is a UK investor, though. So we're allowed up to 15% in overseas companies. But really, it's usually a very small allocation where we can't find interesting companies in certain sectors in the UK. But really, investing in the UK, it's such a global market. There are companies there that do their business in Asia or America, and we find enough diversification in companies listed in the UK.
Can I just touch on the bonds element of the portfolio for a second? What does that give you over and above the equities?
Really, bonds are there for certainly income generation. So we're looking, again, safe investments, but to increase the yield on the whole portfolio. But they also actually reduce the volatility of the fund in an aggregate level. The bonds are not the most exciting investment sometimes, but they certainly hold their value in more difficult times. So when markets are more challenging, we can put more of the equities into the bond portfolio and stabilise the returns a little bit there. And then in more economically growth-orientated times, again, move it back into the equities.
And what about your typical length of holding a stock? Do you take a very long-term view, a short-term horizon? What prompts you to buy and to sell?
Yeah, so some stocks have been in the portfolio ever since I've been managing it from 1997. So some we'll hold for a long time if they keep growing, if they're growing their dividends to us and everything is fine. Typically, stocks are sort of 3 to 4 year holding period, so it's reasonably long. And again, we would sell stocks if we're worried about the dividend, if we're worried about that dividend might be cut, or they just reach price targets, so they appreciate in value, and we see limited upside in those stocks, and we can find, particularly if we find an alternative investment that has better potential.
And can you just touch on finally the sort of process? Is it just you, or are you backed by a team? How do you work on a day-to-day basis?
Well, I've been managing the trust since 1997, but as a co-manager as well, David Smith, who was appointed at the beginning of 2014. So there's two managers, which really shows the resource we're allocating to this trust. And David, I think, is a fine fund manager, has good skills in the area. So he's really doubling up in terms of the amount of effort we can put onto this. But behind us is a large team. I head up the investment team, the global equity income team at Henderson. So there's a lot of resource sits behind us as well, trying to identify interesting and new companies for the fund.
Thank you very much.
Thank you.